Hey everybody, this is Global Trade Live, and today I'm gonna show you how to use POI strategy. Like POI stands for point of interest. Somebody says POC is point of control. Basically, what's the POI is? So basically, the POI is the price on the chart where where the big institutions or banks or like big fishes just liquidity insert the liquidity in the market. So basically, simple form of that, right? So without wasting any time, let's get started over here. So today I'm going to show you how you can use this POI strategy to minimize your risk. Like risk means stop loss. So to minimize your stop loss, we all know that the right now the strategy we use over here, let me just show you over here. Let me just go to the 1 hour. So basically, right now we all know that the strategy we use is like, let me just show you. Suppose there is a support down over here and this candle closed below this area. So what do we do right now is we just wait for the next candle to wake up, and when the next candle break the low of the previous one, we take the sell trade because we have this clean range to the left side and we book our profits, right? So in this case, basically what do we do is let me just take this over here and put it over here. Yeah. So basically what do we do is we do keep our stops above the current candle's high. Like this is an example of an impulse trade, right? And we keep our take profits level at the support level, which is over here, right? So we trade like this. But is there any way to know till which point the current candle will go up and create a higher wick and then move down from that area? Can we do that? Yes, we can do that with the help of using POI strategy. And that's where this thing comes into play. That right now the stops is like 6.6 pips, right? And this trade was taken on 8:30 candle according to the Indian timings. So what I'm gonna do is I'm gonna switch to the one minute time frame over here. Somebody will say that trading on the 1 minute time frame is not good. But the thing is, we are not trading on the 1 minute time frame. It's just that we will see that wick up market structure on the 1 minute time frame. Okay, so 8:30, right? Yesterday 8:30. Okay, that means 24th. Let's go to that area. Okay, perfect. So this is that area over here. So basically, yeah, this is 8:30 candle starting over here. So this is the 1 hour candle starting, right? So now how can we spot a POI? So basically, what how to spot a POI means, first of all, let me just remove this thing over here. Okay, let's just not remove this thing. So basically you need to find out a low, right? What a low is, basically market came down, right? It went up, then it went down again, created another low, and then it went up like this. It consolidated for a little while and then it went down. So basically, in this market structure over here, this is the replica of this market structure, right? So basically we need to find out a low which will give us our POI. So what we should do is just forget this thing over here, right? Just look at only that thing which I'm showing you over here. So basically in this structure, this was the low over here, right? So I'm gonna mark this low and I'm gonna give this label sorry, BOS. BOS means break of structure. Okay, so I'm gonna keep the POS over here and I'm gonna just visualize it, bring it to front. So this is the BOS, right? BOS, so whenever the market will make a low and it goes up and it was consolidating over here, so that means this low is valid. So if there was a candle, which was just coming down in the next candle over here, look, there was a range happening over here, right? Consolidation happened, so that's why this low was valid. Okay, otherwise this low over here, this was not valid. Why? Because we need when the market will create a low, it should go a little bit up, make some candles, and then break the low, like over here. Okay, like in this case, what market did was, market created a low, it went up, consolidated for a while, and then it reversed back down. So this low was valid. Okay, this low was not valid because this is just a retracement, I would say. It's just a retracement, or it's just a one candle thing, so I don't consider that thing. So let's just not consider one candle retracement only. Okay, always look for multiple candles retracement, that will give you a valid low. Okay, so now the thing is, you mark your BOS over here. BOS means the break of structure or the low. Okay, so once you mark that, you wait for a candle to close below. Remember, you wait for the candle to close below that BOS. That means this was your candle. Okay, once a candle closes below that area, you turn on your 20 period moving average. Okay, you can use this, you cannot use this, it's up to you. I personally use this average because that gives me more easy way to trade these setups, right? So basically, you give a BOS over here, break of structure, right? You wait for the market to break that area and a candle to close below that area, right? So you had your candle over here, right? So now, once you have your candle over here, then you need to find out POI, point of control. So basically, a POI is the candle after which the market make a impulsive move, or a market make a good move in the market, right? So a POI is the point after which, or a candle after which, the market gives you movement, a good movement, a big candle movement, right? So what was that POI over here? So we will zoom in a little bit. We'll zoom over here. Okay, so market was consolidating, right? Then we have this small candle printed, and then we have these big candles coming up. So this over here, these three candles, let me just open my tool over here so that it will be easy for me to explain to you which candles I'm talking about. And guys, this is extremely important topic over here, so I want everybody to go through this video again and again to learn this strategy. Because look, I don't use this strategy standalone, right? I use this strategy with my support and resistance strategy, so that's why it really works well for me. So basically, you will look for okay, perfect. So you will look for a small candle, then you will look for impulse candles over here like this, right? So once you have these setups over here, and once you have a candle closing below your BOS, what you will do is you will mark your POI over here, right? So that you will search for a small candle after which you have your movement in the market. Okay, so this was your POI over here. Okay, so you mark your POI. So now you wait for the market to go and tap your POI area. Okay, so that means once you have this thing over here, then remember guys, this is the 1 hour candle which has just started at 8:30, and we don't know where will be the high of the wick, right? Where will be the wick end of where will be the high of that candle, right? So this is helping us to do that. So once we marked this POI, we know that okay, so the new candle is starting at 8:30, so it will go up to tap this area and then it will reverse back down from there, right? So if you will wait for the candle to go up first, create a wick, and then you will take the trade when the next candle break the low, if you do that, then your stops would have been like 8 9 pips, right? But if you trade that area, if you trade from the POI, then look, you waited for the market to go inside the POI, the market went inside the POI. So where your stop loss should be? Your stop loss should be above the POI. Okay, so this is the high of the POI. Your stop loss should be around like 2 pips. So from 10 pips of stop loss, your stops has been reduced to 2 pips. This is not something I'm just telling you, just for the views or just for the subscribers. I use this every day in my trading, and you can see me using this thing in my live trading videos as well. So this is nothing, fake, or this is not a scam, guys. So if anybody just uh, if anybody uses this, then it's good. If not, then it's their call. It's just that I wanted to share this knowledge with everybody, so that's why I made this video. So right, so if you wait for the market to enter that POI and then you take the trade and you kept your stop loss above the POI, then your stops was just around 1.7 to 2 pips, right? And from there, look here, and from there the market just went all the way down, right? So this was an example of GBP USD. So now but yes, there are some conditions over here. So now what you should do, before taking the trade. Let me just show you. Okay, so market was over here, right? So you took the trade at this point when this candle broke the low. Okay, this was your normal trade, but if you traded the POI thing, then your trade would have been over here at the top, right? So basically what you need to do is, when you come to the charts, you look for the monthly, you will follow your regular procedure, nothing new. Okay, nothing new. So you will follow your regular procedure over here. You will go for the monthly, you analyze the monthly, then you go to the weekly, then the daily, then the 4 hour, then the 1 hour, then you go to the 30 minutes to take the trades. Okay, you follow the exactly same procedure you follow every day, nothing new. Okay, so after this 1 hour trade over here, the market went all the way down, right? Then you search for another clean range. So another clean range was over here, right? So now we will go back to the 1 hour. Let's go back to the 1 hour. Sorry, 1 minute, not 1 hour. Okay, yeah, I think. Okay, perfect. So this was your 8:30 again. Yeah, over here. So now let's go to the 1 hour again. So now over here we have this clean range to cover up, right? So what you will do is, you waited for a candle to close below support area, right? Regular thing we'd always do. Okay, then we wait for the next candle to wake up and break the low, to which will give us our trade execution, right? So our normal trade would be like this. Okay, so this was our normal trade, like this, right? But what if we know the POI thing and then we will take this trade? So let's see. So right now the stops is around 12 pips. Note it down. Our stops right now in the normal scenario, when we take trade normally, the stops is coming out to be 12 pips only, right? So now again I'm gonna go to the 1 minute. So after the 1 minute over here, let me just go back. Where is that area? Okay, here we go. So Let me just zoom in a little bit. Okay. Sorry. So basically what you will do is that candle was printed around 8:30 right over here, right? So now before that, what was the low? Let's just find out a low. So this was the low over here, right? Okay, then this candle broke below and closed below that low. That's correct. So what was the candle before that impulse trade, that impulse move in the market? What was the small candle? So we can all see this was that candle over here. So this become the POI, right? Then what do we need to do after that? We need to wait for the market to enter that POI region. Okay, so the market entered the POI region and we waited over here, and when the market entered that region, somebody took the trade over here maybe, right? And where should be the stop loss? The stop loss should be over at the POI, right? Look here, from 12 pips of stop loss, your stop loss came out to be just 3 pips now. Okay, and by looking at the moving average, everything was clear that the market's gonna go down. You don't have to wait for the candle to break the low of the previous candle. Okay, so let's say that suppose somebody just missed out this trade. Okay, somebody just missed out. Then we need to find out, because we know that the market is having clean range to the left, so the market's gonna go down. So what we can do over here, so basically what we will do is, suppose that somebody just missed out this trade, then this was the low over here, right? Then what we need to do, we need to wait for the market to close below this POI, and this was the candle over here, right? So once that happens, over here, we need to find out another thing, right? So basically what happens over here is, this was the impulse move, then this should be the POI over here, right? But look here, the market didn't went inside that POI, but we still have clean range to the left. Then what we will do is, we will again search for a POI, right? Then what do we do is, this was the impulse move over here, right? Then this was the range over here. Okay, but the market again didn't went inside that POI, so nothing over here as well. Okay, we don't have to force trade. If we are missing the opportunities, if the market is moving our way, it's fine, you will get the opportunity soon. Okay, again it created another low, right? So finally over here the market went down, and what was the candle? Small candle before that impulse move. This was the candle over here. Now look over here, market went down, we waited for the candle market to went inside the POI, it went over here, took the trade, and it went straight down like 20, maybe a lot of pips, like 24 pips. And what was the stop loss? The stop loss was just about 2 pips, just 2 pips. So this is how you can basically take the trade really effectively, right? So this trade was taken on 9:30 candle. Okay, 9:30, something like that. So let's have a look at the 9:30 candle over here. Nine thirty is this candle over here. Look, this trade was taken on somewhere around this candle, right? So basically taking a trade like this on this candle when the market moved so much, right? So taking a trade over here could be really difficult, but when you look at the POI things in the 1 minute and you know that you have clean range to the left, things get really easy. So these were the few examples of of GBP USD, of the latest market conditions, right? And So the things you will be doing by coming to the market is you will analyze all time frames, then you will look for a clean range to the left, then you will measure that range, whether that range is enough for me to take the trade or not. So you will do all the regular procedures, you will always follow the regular procedures. It's just that whenever you will be searching for a opportunity to take the trade, like over here you will wait for the market to break below the low of the previous one. So whenever you will search for that, and and the next candle just started, you go to the 1 minute, you will search for a better POI and you will trade the POI. It's just that. It's just that you are, embedding a new thing into your regular strategy, just to minimize your stops, right? Just to minimize your stops. So, and there's one more benefit of using this strategy. Like, the benefit is, whenever we leave a runner running, 90% of the times the market hits back of a runner. Okay, the market hits back of a runner and the market just stops us out. Okay, market does that, and it has happened to everybody, and it still happens to everybody 90% of the times. So this thing over here, trading the POI, will give you opportunities, will give your runners opportunity to run a long way. Why? Because we all know that the market takes liquidity from the wick of the previous candle. We all know that, right? So when the market goes back to the wick to take the liquidity, that's where our entry point is. And that's why we always get stopped out, because market grabs the liquidity from the same point we take the trade. So but if we are taking the trade from the high of the candle, then it will not go to the high. It will be rare of the rarest cases that it will be going to the high and will stop us out, but that's the part of the game. It will happen, but it will happen sometimes, not 90% of the times, right? So this was all about the POI strategy. If somebody is having some issues, questions, anything like that, you can come to me and you will ask me questions. You can write me down your questions, your queries, anything. Okay. So, and this thing applies in all the currencies, all the pairs. I use this thing in gold, I use this thing in GBP USD, I use this thing in GBP JPY. It's just that I wanted to show you that how this thing works, and I just wanted to share the knowledge with you. So I hope this will help you guys. So take care everyone, have a great day.